Today, we're going to talk about how to calculate your net worth and why it is so important for you to do so. According to Bankrate, net worth is the value of all assets minus the total of all liability. Put another way, net worth is what is owned minus what is owed. So for example, if you own a $100,000 house, but you owe the bank $50,000 from the mortgage, then your net worth from that home is $50,000. $100,000 asset minus $50,000 liability equals $50,000 net worth. Net worth is a method individuals and businesses alike can use to determine their absolute value. Think of it as if I sold everything that has debt attached, and what is left is your net worth. I want to talk about what net worth is not real quick. First, your net worth is not going to grow unless you click the like button right now. Okay, so maybe not. But net worth is not just the value of something you own. For example, if you see somebody purchase a $2 million building and then talk about how they're worth millions, it's probably just a sales tactic. Unless they purchase that vehicle in cash, then there is debt against it. The debt counts against your net worth, and that is important to know. Now, I see this gloating periodically in real estate, and it's good to be able to spot the crap and recognize the ego versus net worth conundrum. Now, why you should care is that net worth is one of the most important metrics to track your personal finances, and here are a few of the reasons why I believe that. Knowing your net worth can really help you identify areas where you spend too much money. So if your net worth drops, then you will want to know why. And by paying attention to your assets and liabilities, you will ensure that you'll know if something is negatively affecting it, and that really will help you out. It also refocuses your financial outlook beyond just income. There are many other factors that affect your overall wealth than just income, and people often focus on how much money they make, forget about the expenses and liabilities. Which is why people who earn $500,000 a year can still find themselves living paycheck to paycheck, just like people making $50,000 a year. Your expenses, assets, liabilities, etc. are all just as important, if not more, than your income is. So net worth is the most accurate way to measure your overall wealth. This is the big picture. By calculating your net worth, you ensure absolute vigilance on your overall wealth building. It puts your debt in perspective too. Not all debt is created equal. Debt can be good if it is utilized to purchase assets and that produce cash flow, build equity, and increase your net worth every month. But it can also be bad, so you need to be able to tell which is which and which debt actually helps you out. So if the bank cares about net worth, you probably should too. And the bank cares about your overall net worth. Why do you think they require a personal financial statement every time you submit a loan application? Now, if the bank cares about your net worth, don't you think you should monitor it in order to improve your financial situation? Now, also, tracking your net worth is, hopefully, fun. It can be fun because you get to watch the dollars just slowly tick up and then begin to increase speed as you build wealth more efficiently. And I enjoy and look forward to this calculation every month. I certainly enjoy the results on a good month. It may not be fun all the time, but it is useful. And if it goes down, you may not enjoy that, but it is better to find out at the beginning of the month and be able to just turn off that leak and plug the hole than it is to have it continue to decrease without your knowledge. So the bottom line is this: having a solid understanding of what your net worth is will only help you improve. Now also, your reticular activating system, which, let me back up. Have you ever bought a car and then almost magically started seeing that car all over the place? Now this is due to what's called your reticular activating system, also the RAS, which takes what you focus on and creates a filter for it. For that reason, as you focus on your new car, your brain starts to subconsciously pick out those vehicles in traffic and recognize them. The way your RAS functions is also known as the Bader-Meinhof phenomenon, or frequency bias. This phenomenon is the reason journaling and writing your goals is so important. The more you focus on your vision, the more your brain starts to recognize opportunities and help it become a reality. So how often do you need to calculate your net worth? As the saying goes, what gets measured gets managed. The more you pay attention to your net worth, the better you will understand what affects it. For this reason, I recommend that you track your net worth at least quarterly. Now, I have recently started calculating my net worth at the beginning of every month. This allows me to notice if there's a sharp increase or decrease and what affected it. The better you understand the factors that help your net worth increase, the better you will be. What factors affect your net worth? Essentially, an increase in asset value or a decrease in liabilities are the two factors that affect your net worth. For example, if you get a $20,000 bonus and you spend it on a vacation, your net worth doesn't really change. However, if you use the money as a down payment to purchase a $100,000 home, your net worth increased by that $20,000 because you dumped it into equity in a house. You actually got to keep it. And then every month after that, your net worth will increase a little bit as you pay off the mortgage and you hopefully receive some cash flow too. Every time you make a payment on a loan, the principal that gets paid down is added to your net worth. And that's one of the reasons that buying a new car is so detrimental. Think about if you buy a new car for $50,000 and then 5 years down the road, it's only worth 25 grand. If you're lucky, some cars depreciate faster than that. Meanwhile, you probably spent $55,000 or $60,000 on this car due to the amount of interest you paid. That means you took a $30,000 hit on your net worth, all while paying higher insurance and potentially wasting money on extended warranties and other crappy upgrades. For this reason, cars are just a bad idea, but this is what you need to understand about net worth. So how to calculate your net worth? In our example above, owning a $100,000 home that you owe the bank 50 grand on means that your net worth from that home is $50,000. Again, $100,000 asset minus $50,000 liability equals $50,000 net worth. Calculating your net worth is pretty simple. Line up all of your assets on the left side of a piece of paper, and then line up all your debts and liabilities on the right side of the piece of paper. Simply subtract your total liabilities from your total assets, and the difference is your net worth. I wanted to include just a few common assets that people use. So here's some common assets that people have. The valuation of these will count towards your net worth. Cash, checking and savings account, real estate and other property, businesses, vehicles, securities. Please note that it is important to give an accurate valuation. If you inflate the value of your business unrealistically, you might as well not track your net worth at all. Conversely, here are some of the most common liabilities and debts that people have. Some of these, like mortgages, can be good debt and be tied to an income-producing asset. The mortgage will negatively affect your net worth, but if it's tied to a rental property, with every payment it decreases and your tenants are making the payments, so good debt. Student loans, mortgages, auto loans, consumer debts like credit card balances, lines of credit, alimony, personal loans, miscellaneous crap, medical bills, taxes, judgments, etc. Some of these liabilities like medical bills and taxes are just absolutely unavoidable. You can't really plan on that. It's what you got healthcare for, but the vast majority are under our control. You absolutely can control auto loans, consumer debt, child support to an extent, etc. So don't be a victim of your liabilities. Spend your money intelligently and avoid the unnecessary liabilities. The average net worth by age in America is staggeringly low. It's ridiculous. So I read an article on wallet hacks that I'll link below that was very interesting, and they talked about the average net worth of Americans, and it was so low. According to this chart, people my age should have a net worth of $10,200 if they own real estate and only $5,044 if they do not own real estate. Damn, I'm doing much better than I thought. Thank you, random survey. This data is terrible, people. You have the ability to blow these numbers out of the water. Just be smarter with your money. Make it a point to look at your net worth every single month. Step back, look at the big picture in order to ensure that you are making the right decisions and moving in the right direction.